How can investment bankers find more deal flow without cold calling? Let's talk about that in this video. My name is Marco Palmera. I'm the founder of Ulysses, and our company is purely focused on deal origination. We help private equity groups, search funds, investment bankers, and advisors in finding more deal flow so that they can close more deals and ultimately, be more successful. So, in this video, we're going to touch on this specific topic of finding more deal flow as an investment banker without cold calls. Now, let's start with one premise. A lot of investment bankers out there are either part of a big firm, in which case they get deal flow from references because people trust the firm implicitly, and so on and so forth, or they were part of a big investment banking firm. Then they decided to start their own small shop and they rely on the relationships in their own network to identify suitable opportunities for deal flow. Of course, I'm generalizing it, but what I'm trying to say is that most of the deal flow that comes through investment bankers is either from their existing networks, from their network of partners, or in some cases it's kind of like a event hunting type of thing where these groups go to a specific event, they meet with business owners, they discuss market insights, and then ultimately they try to identify people that might be looking for an advisor when it comes to the sale of the business. Now, if you are an investment banker, maybe some of these things resonate with you. There are a few firms that do deploy alternative strategies. Of course, one of them is cold calls, another is cold outreach through a variety of different channels. But there's just a tiny portion of the industry that is doing that for a variety of different reasons. I'm sure you might be familiar with the concept of compliance, especially if your firm is a little bit bigger compared to just a small shop with a few investment bankers. And when it comes to outreach or doing something to generate business, a lot of investment bankers generally struggle with these compliance issues because they need to go through regulatory approval before they can actually build a new strategy, build a new system that brings them deals. So getting to my point, most investment bankers rely on their network and referrals. And when it comes to generating new business, then they feel that the only way to get deals through the door is either picking up the phone or doing more of what they always done. So meeting with more people, building up more relationships, so on and so forth. The truth is, there are also alternative ways for you to develop your own proprietary pipeline of deals, which it's really complementary to what you are already doing, because when you go for a referral partner or you leverage your existing relationships to find deals, you're going to get a certain type of transaction through the door. Most likely it's going to be a person that is already motivated to sell. Maybe he already went through the process, he prepared his documents, or he has been recommended by somebody and as a consequence has a higher likelihood of converting into an engagement. But that is just a tiny portion of the marketplace. There's a huge portion of people that might not be that ready, but they will become ready in 2, 4, 6 months' time. And if you don't tap into these prospects, you're gonna leave a lot of money on the table and a lot of good opportunities on the table. So how can you tap into those opportunities without necessarily cold calling and having a squad of analysts that just picks up the phone every day? Of course, I understand that might not be an activity that generates immediate ROI for you, but I notice that sometimes firms do that because they feel that's the only way to generate more flow. So first of all, we want to make sure that we build something that is compliance free, so it doesn't require you to go through a lot of hurdles when it comes to compliance. And the way to do that is basically building an infrastructure that enables you to reach out to business owners without necessarily disclosing your name up front, so that you are prevented from going through regulatory compliance, and you can ultimately use sort of like an intermediary that represents you, and then you only step into the conversation once the relationship has been established. There are a bunch of different ways you can do that. You either hire somebody external that does that work for you, or you can create a avatar of your own firm that will represent you from outreach purposes, so that you don't have to use your existing name and your existing flagship name as mean for doing the outreach. Upside, again, maybe you don't need to go through compliance for this type of setup. The downside is that you cannot leverage your existing reputation and your brand name to get a foot in the door with a lot of business owners. So there are pros and cons of the model, but what I've noticed historically is that a lot of investment bankers are more concerned about compliance issues, which brings me again to the point of having something in between, either a third party that represents you or sort of like a spin-off of your existing firm that you can use as an alternative name for doing the initial outbound activity and generate that initial flow. So once you have that, and again, a bunch of different ways you can build that. I'm not going to go into technicalities in this video, but once you have that, you of course need to understand what are the channels that you want to go after. And provided we want to avoid cold callings, there are many others that you can leverage, and your choice will be greatly dependent on the type of industry that you're going after. For example, if you're an investment banker that represents primarily blue collar businesses, I wouldn't necessarily look for them on LinkedIn, despite the fact you might find some good leads there. It's very unlikely, based on my experience, that you're going to find a plumber on that is 60 plus on LinkedIn, because in most cases he doesn't even know that LinkedIn exists. So in that case, maybe you want to fall back on voicemail, email, and a bunch of different channels that are more that people are more accustomed to. On the flip side, if you're representing, I don't know, doctors or SaaS businesses or companies of this kind, then maybe LinkedIn is the best way for you to go about it, because a lot of folks are going to be there. Maybe they use LinkedIn for their business already, so they spend a lot of time on that platform. So you want to define a few of these channels that you're going to use for your specific industry and that you're going to leverage to find motivated sellers. And the way, again, you do that is by identifying what are the ones that are more likely to generate results in your specific industry. Now, you can pick them all, but of course that will create complexity that you might not necessarily want to sustain earlier in the process. So once you have an initial understanding of what are the channels that you want to use, then we want to create a pool of targets that are going to be selected based on your specific thesis. So geography, size, so on and so forth. And I would recommend you create a layering system for the data you collect, because if you're going to do outbound, most likely you're going to work with lists. And if you just rely on the regular databases, chances are you're going to get data that is either overused or it's not as useful to you after all. Reason, again, very simple. A lot of people have access to these databases, plus the coverage of these databases is not 100%. So they cannot scan the entire market and find you information about business owners. And the problem is that a lot of people treat them as a source of truth, while in reality, they just provide you a partial picture of what's happening into the market. They don't have all the businesses listed there. And the more you go granular on these platforms, the more you will realize it. Additionally, if you strictly rely on platforms and if you want to leverage signals on the platforms, chances are you're going to be misguided, because these signals are based on data points that are collected online, which might not necessarily be a good tell that a person is actually interested in selling the company. They might work well for other industries like sales and business development, but when it comes to business acquisitions, I've noticed that these signals don't really produce a lot of results. And to some respect, they can be restrictive of the opportunities that you might be able to find if you were just to be a little bit more accommodating with the scope. So layering system, I'm not saying that you don't want to use the data on these platforms. I just want to say that that might be the low-hanging fruit. So if you're going on, I don't know, Grata, ZoomInfo, PitchBook, whatever, you can start with that, but then you need to create other layers of data collection so that you can find more business owners that are present in your target geography, in your target market, that ultimately match your thesis. And that will enable you to have an unfair advantage because, again, you're going to own data that nobody else owns, or I would say less people own. As you get that, then you can start rolling that data into your system that you created before, as I mentioned. And of course, the way you message and the way you interact with people, when you start setting up a system like this, will be very different than the way you interact with folks that are motivated, that have been introduced to you by one of your partners, that have been introduced to you by somebody you know, because we're talking about two different types of audiences, two types of traffic. On one side you have warm traffic, on the other side you have cold traffic. And in most cases, if you want to generate new deal flow through outbound and through alternative channels that are not cold calls, you would be dealing with cold prospects, so people that never heard of you or just heard something about it, but they still need a lot of nurturing. And you need to first connect with them in a meaningful way from the get-go, but then have a process to interact with them so that you can first understand where they're at in their decision-making process when it comes to selling the business, and then how can I communicate with them in a meaningful way so that I can take them from where they are to the promised land without fucking up their relationship. Because again, very important subject, very important topic. I see a lot of people that are messing up this thing because they treat every prospect the same, and as somebody comes in that might not be necessarily ready to take a certain type of action, they just disqualify the prospect as not motivated, where in reality, it was just maybe a few steps away from making a decision. And with the right system, you would have had the opportunity to drive them to that particular decision and ultimately sign them up as a client. So once you have all these pieces together, so the compliance part handled, then you have the system in place, you decided which channels you want to use, you layer down your thesis, and you created a pool of targets, and then you build a messaging system that resonates with them. There's the nurturing part, which I already mentioned, that enables you to lead these people to a call, multiple calls, and ultimately a relationship and an engagement that gets signed. This is from a very high level perspective how you can build a system that generates more deal flow for you without cold calls. And it is a system that, of course, performs without you being needed to build new relationships, without you going out and networking harder, because it's fundamentally a outbound system that you create, own, and control that can generate predictable results for you, provided you have taken care of these steps in the right way. So the way you're basically approaching this is by saying, okay, I feel I have a decent coverage over the warm market because I've been dealing with my partners for a few years. They constantly bring me deals. I generally can expect X, Y, and Z opportunities every quarter from them. But I feel I need to find more deal flow. I want to grow my investment banking firm, or just want to sign more engagements for my team. And I need to go out and find people that might not be aware that we exist, or that might be considering an exit but might not be super ready yet. The way you do that, again, is you build a system that reaches out to them, attracts them, and then nurtures them over a process that you design, and ultimately converts them into signed engagements. One example I can give you of this is a company that we helped. In that case, we did the entire build out for them and we ran it for them. And they ended up finding one amongst other opportunities that converted in 2 deals, which was kind of amazing, because they got this motivated person, which wasn't super ready to sell the business as we reached out, but we created a system to keep in touch with him regularly. And over a 4-month time, he got back to us and he was now very motivated in selling, and he decided to engage that particular investment banking firm because we have been connecting with him regularly and in a meaningful way. Beautiful thing about that particular relationship was that the owner ended up having two companies, not just one company, and he decided to sell both of them through the investment banking firm that we were working with. So these relationships can yield disproportionate results over time, provided you have the right system to create them. And again, you can build it on your own. You can have third party like us build it for you and run it for you. And just focus on the opportunities that are coming through. And there are a variety of different ways to skin the cat, really, because a lot of it depends on your specific thesis and what is the outcome that you wish to accomplish. Around that, a bespoke solution can be generated, can be produced, and the most productive way to do that is generally over strategy sessions where we map out your specific, thesis and ultimately design a project that can deliver the results that you seek. And those, again, might not just be you wanting to get more deal flow without cold calls. It might just be you wanting to allocate your resources more productively. Maybe you have analysts that could generate higher ROI for you if they were just spending time reviewing deals instead of finding them. That's something that this system can solve for. Or you just want to grow your business, but you have relied on referrals for a long time and now you don't know how to get more deals through the door. This system can help with that. And so you can, again, build it on your own, build it through a third party. But the point is, if you want more deal flow without necessarily cold calling, multi-channel system that targets your avatar where they're more likely to respond to you, and then a message that resonates with them in a meaningful way and nurtures people based on where they're at in their decision-making process, so that you can convert more deals over time and ultimately get the flow that you need through the door. If that resonates in any way, shape, manner, or form, you can check the link below to book a strategy session with our team. We can map out your specific case, see whether or not we can help, and if not, we'll tell you flat out, because generally we have a waiting list for what we do. We cannot take everybody on because, again, our engagements are very bespoke in nature and they're tailored towards the customer. So if you want more deal flow, that might be the perfect next step for you. And for all the others, I will see you in the next video.